All right. Hello, everyone, and welcome to the National Academy of Social Insurance's webinar here. I'm excited. For those of you who don't know, I've recently joined the Academy as a senior fellow. I was formerly at the Century Foundation, the U.S. Department of Labor Office of Unemployment Insurance Modernization, and before that, the National Employment Law Project. So lots of colleagues here to join us. This is part of a series of continuing conversations we're having about federal layoffs to answer people's questions. And so I'm really excited to be joined by, some high luminaries in the field. Dr. Unique Morris-Hughes is the director of Washington, D.C.'s Department of Employment Services, aka DCDOES, which is a good moniker because she does all of the work firsthand that we'll be talking about today. Flannery O'Rourke is the UI program director at the National Employment Law Project and also importantly has served as a claimant advocate in Virginia. So she has her finger on the pulse of all things claimant related. And Andrew Stettner is the director of the labor team at the Century Foundation and recently served in the Biden administration, also in the Office of Unemployment Insurance Modernization. So we've had a lot of similar roles. I want to kick this off just to help get people on the same page about what's going on with initial claims and federal layoffs. This is a bit of a 101, just the facts panel. So as things start really hitting, we're all on the same page. We all know what we're talking about. So here's a little bit of a glossary. Unemployment insurance, right? Its purpose is not just to pay individuals once they lose work, but it's also there to help people get reemployed to good jobs to replace their old jobs. And it also serves as a macroeconomic countercyclical stabilizer. I'm saying that slowly for the captioner, which means that when some people get laid off, they get help paying bills so that it doesn't spiral, so that one wave of layoffs hopefully doesn't spiral into other waves of layoffs. UCFE, unemployment compensation for federal employees, is not really so much a program as it is a reimbursement mechanism, because UCFE works in every state the same way that unemployment insurance works. So people are essentially applying for unemployment, but it's getting reimbursed by the federal government. What reimbursable means is very important because it means that the states don't have wage records for federal employees. And so then the federal government needs to confirm, or the state UI agency needs to confirm with the federal government what the reasons what a person's reason for separation is and what they earned, and make sure that that all matches up with the application. UCX will probably not come up very much, but that's unemployment insurance for ex-service members. And another thing that I just wanted to lay the groundwork on is this concept of when due. Unemployment insurance is not like Social Security, where Social Security disability applications can take months. Unemployment insurance is expected to pay benefits within a few weeks of application, and that's that exacerbates sort of the challenge for state agencies. So with that, since we have one of the most important people at the center of all of these things with us today, I will turn this over to Dr. Morris-Hughes.
All right. Well, good afternoon, and thank you for having me and giving me an opportunity, quite frankly, to dig into details and maybe even some nuance with what is happening. And I first want to start, if it's okay, with just a little bit of a state of play and where we're at. I didn't think we were going to be back in a pandemic-esque type of situation, especially so soon. But here we are. I've been describing this as our Detroit moment. And what I mean by that is in the Motor City when the automobile plants were shuttering and closing and laying people off. There was mass unemployment. And in the District of Columbia, we have really three huge industries, and these industries are what I call both horizontal and vertical, but they're the eds, meds, and feds. And we are seeing both of these sectors shed jobs in ways that remind me of the pandemic, And it feels like we're having a Detroit moment. We are seeing a slight increase. Well, let me back up. What makes DC really unique is that every 4 years there's a transition of power. And so there's anywhere between 25,000 people that are exiting the federal administration, and they're applying for unemployment insurance benefits here in the District of Columbia. So we have that population. And members of that population that are seeking unemployment and are back in the labor market looking for jobs. We already had 3 other groups, those that were recently unemployed and with a reasonable expectation that they'll return back to work, those that are chronically unemployed and they cycle in and out of the labor market. And then we have those that are long-term unemployed and they pick up work, but then there are longer periods of time that they're already work. Now we have really, it's what I am seeing for the first time in my lifetime, probably all of our lifetimes, federal jobs, being shed and people being let go at really in ways that are different than what we have seen. So in terms of like what is happening on the ground, and I'm calling this ground zero, it is a very complicated state that we are in today. And it is putting pressure on the system. And when I mean system, I'm talking about like at a 50,000 foot level, unemployment insurance and how we operationalize unemployment insurance policies and laws and regulations. It is putting stress on the system in a way that feels reminiscent of the pandemic. Does that make sense? Do you understand? So here at ground zero, things are very, 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 very complicated. Now, we haven't had the number of rule changes and policy and UPL changes, but we've had an equal number of executive orders. So it feels very similar. Like we know, we know this feeling. So we are navigating it. And my team, the DC team here, is very tenured. My deputy has been in the agency for over 20 years. So she lives, sleeps, and eats unemployment insurance. I have a very tenured team. And we're ready for it. We're accustomed to it. We're battle tested. I call us economic first responders because we provide a financial lifeline. But I'll be honest with you, on the ground here, it is a very complicated situation that we have here in the District of Columbia.
Great, thank you so much. And just for our audience, for people who don't know that nomenclature, a UPL is a UI program letter, and it is how the U.S. Department of Labor communicates guidance to state agencies. And so I will turn it over to Flannery to talk a little bit about this from the claimant perspective.
Sure. So I basically put together, the list of all the things I want claimants to know, because I was thinking, whether attendees are federal workers, whether they are folks that are advocating for federal workers, I wanted to make sure that this information was out there. So as Michele mentioned, unemployment compensation for federal employees, or UCFE, just ensures that federal workers are covered by regular UI. And workers are going to access UI in the state where they previously worked or where their duty station was. So this weekend, I was in Northern Virginia, and I was talking to workers that they live in Northern Virginia, but they work in DC. And so their duty station is in DC. They would file in DC, not in Virginia. Regular UI, it's a federal state program, and so it looks a little different in each state. The program is administered by the state, subject to federal oversight, and both federal and state laws set the rules. And so sometimes there will be similarities, or every state will have basically the same rules, but other times the rules are going to vary greatly. And where we really see this, impact workers most right now is with benefit amount and the duration amount. So thinking of the DMV area in particular, DC, Maryland, and Virginia each have different maximum benefit amounts, and DC and Maryland each have uniform 26 weeks of benefits. Virginia does not. Generally, workers should be filing when they're laid off. Claims begin the week that folks file, not when they lose their job. And states have strict rules on backdating claims. I will say an exception is that for folks that are getting severance as a part of an involuntary reduction in force, because severance can impact eligibility, that may be time where you're going to wait until you end receipt of severance to file. But I would consult with the state UI agency where your duty station was. States generally require that you verify your identity online or in person as a part of the application process. And to be honest, this can be a little bit of work. This is not a perfect process. Sometimes you'll be asked for additional information. You may have to go in person to a local office or to USPS. Entitlement to benefits is determined at the time folks file and for each week that they claim. Only qualifying separations are covered. Generally, workers are not entitled to benefits if they voluntarily quit without good cause or they are fired for severe misconduct. So folks that are considering things like the voluntary separation incentive payments should know that they are unlikely to qualify depending on their state's laws. Probationary employees who receive those termination letters citing poor performance, they generally are likely to qualify because that's generally not a reason for disqualification. And in terms of the fork in the road deal, you may not qualify if you voluntarily separated. However, if you ultimately don't receive the payment, then that might, in some states, mean that you could show that you quit for good cause. Generally, when in doubt, my best advice is apply, and the state will figure it out. After you apply, the state UI agency is going to determine if you're monetarily eligible for benefits. And states' rules vary, but generally they're looking at your earnings over the past 18 months. The state UI system, as Michele mentioned, is not going to know a federal worker's past earnings. And so the worker or their former federal employer, meaning the federal agency, is going to have to provide that information. In the meantime, I've heard from some workers that are pretty freaked out because they get a notice that says you're not monetarily eligible. It might even say you were denied, or it'll show $0 in earnings. This is completely normal. All hope is not lost. This is just a part of the process for federal workers since the state UI agencies don't automatically have their wage information. So the state UI agency is going to request the information from your former employer if you don't have it in hand. And in particular, they're looking at two different forms. There's standard form 8, and that tells you about your potential entitlement to UI and also provides your former employer's agency code and address. And then there's standard form 50, and this is the official notice of personnel action that explains why you were why they say you were separated from employment. In some cases, your employer is going to give you these forms and you'll have them in hand. And so you'll keep a copy and give a copy to the state UI agency. In some cases, you're not going to have the forms. Do not wait until you have the forms to apply for benefits. Again, your claim starts when you file, not when you are separated from employment. Now, the state UI agency will reach out to your former employer to collect this information. And if they don't get that information within 12 days, they're going to help you fill out an affidavit, which it's ES 395. These are all fancy terms for basically another form that you fill out where you are providing evidence that you worked for this federal agency and of the wages that you earned while you worked for them and of your reason for separation. Generally, you should hear back about your application in 21 days. I know Michele mentioned this when due, this timeliness requirement. The reality is that sometimes it takes a little longer than that, especially when there are a large number of claims that the UI agency is dealing with. If you're ultimately found entitled to benefits, you're going to be you'll be paid for each week that you claim. And so that means while you are waiting for your application to be processed, you're going to want to keep filing weekly claims. And it's really important to know that as a part of the weekly claims, you have to meet this criteria of being able and available, making your weekly work searches and job contacts, and accepting suitable work. I have a few final tips. Remember that each state's UI program has its own unique set of rules. So if you have a question, you really want to ask somebody, at the UI agency or advocates or union representatives in that state. I also want to note this is an insurance claim. These are benefits to which you are likely entitled. And so you wouldn't think about going to the doctor and saying, well, I have health insurance, but I'm going to pay for that CAT scan out of pocket. No. So please claim the benefits to which you're entitled, even if they're not enough, and even if the process can be a little slow or takes a little bit of work or problem solving. This is your money. And it's really important, I think, as Michele was noting, for UI to have the economic benefits that we needed to have to help prevent collateral impacts, meaning other folks losing their jobs. We really need that workers who are entitled to benefits to claim those benefits. If you possibly could be eligible, apply. A lot of misinformation is out there, and because you may have coworkers that you work with where they maybe are stationed in another state, they may share information with you that is true for their state, but not for yours. And finally, if you have not yet received notice of termination, but think that you might, please go ahead and save your pay stubs and your W-2s and any other important information in a safe non-workplace, because that can help expedite your claim by being able to have proof in hand of your employment and your wages. Thank you.
Thanks so much, Flannery. Yeah, just to reiterate, 3/4 of people in normal economic times declare themselves ineligible for unemployment. That's up to the state agency. 60% of those people don't apply because they've just decided they're probably not going to be eligible. It's not great when a lot of people make that decision for themselves. Okay, so now I'm going to turn it over to Andy to talk about some of the federal weeds that we should be thinking about.
Yeah, and thanks for that great presentation, Flannery. Just in talking with federal workers, a couple of things that I would just reflect on. One is when people first apply, they're telling them that they have zero eligibility. Don't be deterred by that. That's just I almost call it just like a glitch in the system because you're not a regular private worker. That's part of the process. And then people are really frustrated with this process of getting the verification from their prior employer. Push forward. You need to talk about it, but I know from talking to claimants in DC, the agency in DC asks you for your pay stubs. They ask you for other forms of verification, with which that they can start processing your claim as they're waiting for the federal agency to return it. So, don't sit around and waiting for you to get those two forms that Flannery mentioned, your SF8 and SF50. There is extensive, guidance to the states. There's a handbook that says everything about how UCFE is supposed to operate. But like Unique said, this is a very different type of federal layoff than we've had before. About 30 or 40 members of Congress wrote a letter to the U.S. Department of Labor asking for additional guidance in the form of a UPL to kind of say some things about what needs to happen right now. First of all, we really want the Department of Labor to reemphasize the requirements in the handbook, which are that workers should be paid in a timely fashion, even if the federal agencies they worked at are slow. Indeed, there's a requirement that workers should be paid within 12 days if that former employer fails to respond to a request, for information. Really want them to really underscore that, with the states and how important it is to follow, that guidance. We also believe that they can help address some of the very unique nature of the terminations we're facing. Obviously these are, as Flannery and Michele said, there's 53 different states. They each have their state law. State law does govern this program, but at the same time, we do think guidance can help. For example, this issue of the firing of probationary workers. We do think that it was something that the Department of Labor should put out a message that these kind of mass probationary firings, regardless of what they said in the email, the SF8, SF50, really what they were layoffs. There's ample evidence and that the state should really look at the totality of evidence that what's happening is that entire units are being dismantled, or every single probationary employee in X or Y agency was terminated. I think there should be a presumption of eligibility for those probationary workers. Then we should be doing everything we can to help agencies like Unique get that access to the wage data to verify individuals. We've talked before about the need for up-to-date contacts. The way in which the states operate is that they directly contact each federal agency based on industry code. The Department of Labor publishes on pretty much an annual basis what that point of contact is going to be. Given all the changes in the federal government, we know that many of those published contacts are likely out of date, and it's a little old school. It's pretty much an email address. So if it doesn't get through, it might just bounce back. And then the state is kind of, well, who do I contact at the Department of Interior to validate, this claim? DOL should take a lead in making sure that those contacts are up to date. But we think they can go even further. We think that they can be providing lists of individuals that are impacted, by these terminations. They could be coordinating. Let's say in Colorado, there is many employees, from the Department of Health and Human Services. Well, then the Colorado Regional Office of Health and Human Services, well, let's provide a list of the names of the employees at the agency that are impacted, so the state can do that payment within those 12 days and have a greater degree of confidence that this individual was indeed, eligible for benefits. This is a challenging situation. Whenever there's a mass layoff, unfortunately, there will be individuals out there that seek to fraudulently claim benefits. So some of the measures that I talked about could help the states pay benefits more accurately. In addition, that's why it has been important for states to put in identity verification and other, techniques, because this, program, because it doesn't have, and that's another similarity to the pandemic. When you hear you talking, Dr. Morris-Hughes, we're now talking with a program that doesn't have all the traditional checks and balances of regular UI. So states are having to integrate that, innovate that on the side. And last but not least, and I wouldn't never leave this out with Dr. Morris-Hughes on the phone, states should be getting additional administrative funding that have this high value of claims. This administrative funding, it generally is a formula for it. It's based on historical practices, but we know that these claims are causing more time per claim because of all this unique nature of this. And basically you're asking the states to do work that they're not going to get paid for unless DOLs make some modifications to paying the states for this additional workload. So that's another piece where I think the Department of Labor could really be helping out the states given this very unique situation.
Great, thank you so much. So we've left most of this period open for question and answer. We know that the public has a lot of questions about what's going on with unemployment insurance and federal employees. I neglected to mention at the start, but regular unemployment insurance is also really important right now for all of the contractors and other folks losing their jobs as a result of federal cuts. So we're here to answer questions about regular unemployment insurance as well. I'm going to kick it off. You just ask a question by clicking on the Q&A box at the bottom of your screen. Here I am in the office, like pointing to it as if you could see me pointing. But it's at the bottom of your screen. I'm going to take the privilege to ask the first question because I'm genuinely curious. Dr. Morris-Hughes, in DC, how is severance handled? Should people apply right away or should they wait until their severance runs out?
They should. And I feel like answering in this way, I will answer truthfully, but I understand the emergent nature of the situation, but they should apply when severance runs out and they should not let an extended period of time go by. So as soon as it runs out is when they should apply. We don't want to create a situation where they file an initial claim, they're still receiving severance, we check with the former agency on their wages, and they say they're actively receiving payment, and or that they're actively receiving wages. I'm hedging a little bit because we're finding different agencies are using different terminology for the same thing. We're finding that for severance for some agencies means that they are no longer working and they're receiving a final, payout of salary. And it looks different for different agencies. Then some agencies are saying that they're still receiving wages, and it's severance. Like, we know that they've been separated from employment, but they're still receiving wages to give the appearance that they're still employed. So my recommendation is to wait until severance is paid out, and immediately file your initial claim.
Great. We're starting to get some good questions in the chat here. One from Chris Morehouse. It may be too early to tell, but do the panelists have any observations on reemployment efforts, which DOL previously worked to integrate with the UI system? Many federal jobs do not have clear private sector counterparts, and funding for nonprofits with similar missions is also being affected. I know that we talked about this recently, Dr. Morris-Hughes, that, federal employees, understanding federal employees' skill sets and how they can match in the private sector is going to be a real challenge that I think is going to probably require, a group effort to try and figure out.
So
what are folks' reactions to that?
If there's two things that I want to say to this. I mean, one, you'll see, especially in this DC, Maryland, Virginia region, that state workforce agencies are working with the private sector and state and local government on hiring fairs. And so even in my agency, we have like 70 offers out right now. To most of them are former federal employees, because we find value in someone who has the experience in working in government and public service. So you'll start to see different reemployment efforts through job and career fairs. But there's a really interesting, I think, data that I suspect, but I don't have hard data on, is that when we talk about the federal workforce being laid off, I think there's this assumption that it's people who have these like 6-figure jobs or, 75,000 and above types of salary. And from what I'm seeing, that's not exactly true. We're seeing people who've been responsible for grounds and maintenance, some of the lower wage and skill jobs that are being laid off. And this ties back to the question about skill set, because we know least about the federal workforce in terms of skill set. We're starting to learn now on the types of occupations that have been, shed or cut. But it is a bit challenging, and it's interesting for us to see who is applying. Now, depending on the type of occupation that has been part of a layoff, there may be an easier transition into another industry or sector. Maybe. It will take the claimant, seeking or job seeker, to readjust their mindset to be able to pivot. But there is a group of people, and I think they get left out the conversation, and they are lower waged federal government workers that we should be, quite frankly, the most concerned about moving into private sector jobs that have held positions for a very, very, very large, a long period of time that we're just not talking about, but we're beginning to see.
Yeah, I was just talking to a federal worker who said that their cleaning contract has been eliminated, and so she said she has to bring her garbage home with her. And
I've heard that too. And people are bringing their own cleaning supplies. I've heard, and so it is impacting our labor market in ways that are untold right now.
Andy, you're one of the first people I think of when I think of reemployment. And
Yeah, I'm happy
yeah.
to jump into that. I think I really like what Unique said about the Detroit moment. I think, and we've heard it not just in DC and other places like Kansas City, where they've looked at their labor market, they've looked at the federal employees, in their area, and there's simply not enough job openings, for the occupations and education levels of the federal employees that are being separated. And so, that's why it is really important. I've really been emphasizing that we really should be demanding that the federal government follow the traditional reduction in force regulations, which both give workers that access to severance that Unique was talking about, traditional severance, and also have some rapid response requirements where there's a notification, to the state, so they know who's coming in terms of who's being laid off, and they can be proactive and send out their staff members, to even in person to locations to do presentations about unemployment insurance or reemployment. We should be getting ahead of this, but basically we're forcing the states to kind of go blind because of the way in which these mass layoffs are happening.
Yeah, I also want to call out in the comments here, David Balducci added as a question. He's the former US DOL lead for employment services. He says displaced federal employees should immediately seek job search assistance in their local American Job Center to obtain job finding and placement services, resume preparation, interviewing skills, et cetera. This should be done irrespective if they are waiting for UCFE due to severance. Really good advice.
Totally agree with that. I totally agree with that. And if you visit fedsupport.dc.gov, we list a lot of reemployment job seeker services through our AJC, including one that I'm pretty particularly proud about. It's a AI-driven technology to help create a resume that is more tailored for these complex AI search job engines that are out there. And so absolutely should not just sit and wait for UCFE. People should be seeking all services that are available.
Great. Yeah, and I would call out that several states have great FAQs up for federal employees. I'm thinking of Maryland, Maine, Washington State, DC, Virginia. States are putting up really helpful landing pages to connect people between unemployment and reemployment. I'll move on to another good question here from Elise Gould. Who is the federal employer, the agency or the department you work for? How does OPM fit into the verification process? Your employer is the agency you worked for. I'm not sure how OPM fits in. Does anybody know?
No, they're really not part. I mean, unless you can contradict me, they're really not part of it. It's a direct connection between the states and the individual agency. That's why there's that agency code. You just directly go to the agency. That makes it a little tricky, right?
OPM,
right, unless you work for OPM.
Then we'll contact OPM.
I'm bringing another question in here from an oncology nurse about what happens to federal employees' health insurance when they get let go, and how is health insurance covered? And she rightly points out that COBRA is too expensive. But unfortunately, I think that's where folks are stuck, unless anybody knows anything other. I mean, at least we now have an exchange.
Right. For the probation, right. For the probationary firings, that's going to be, 30 days after your firing. The reduction in force, I think when you're still on the payroll for that longer period of time, you probably more likely to access to benefits. So I'd like to confirm that. I think the general advice that, for separating federal employees, like Michele said, it's probably going to be going, to the exchange. I think it's going to be, so expensive for COBRA. But I do know, and the questioner is asking about people with severe illnesses. There may be some real concerns, about doing that, especially if they have certain providers and very high cost of care. Whether switching at an inopportune moment can really hurt people. So it's a real issue. The best thing that we have, especially with the enhanced premium tax credits, you can get access, to a marketplace plan when you're out of work, really at no out-of-pocket coverage for the premiums that are being paid.
I will add that I was researching this earlier this week, and the only place where I saw that healthcare coverage was going to continue is for the folks that are certain folks that do the voluntary early retirement. Those folks will be covered by the health plan.
I've got another question here from a third-party administrator. Any trends or suggestions on initial claims processing to minimize, mitigate state adjudicator calls when the majority is related to the reduction of force? I mean, my quick answer is, we've said you don't have to have all of your forms, you don't have to have all of your information, but it's really good if you do. And I would say to any federal employee right now, print out your last 18 months of pay stubs, not a year, 18 months, to make sure that you have those ready to go, and then be on the lookout for your other forms. The SF8, by the way, I've heard that there are agencies that aren't issuing them because they're planning on responding timely to the state agency. So you might not get all of the forms, and if you don't get them and you're locked out, work with what you have. But having all the information up front is great. Anything anybody else wants to add to that?
I think that relates, Jim, to your question before, about minimizing the confusion and the information that the states are getting from the federal government, and also that need for guidance. If state agencies are getting, some, piece of paper or email that says, someone was, fired for, failing to meet the status of the agency and its priorities. Well, that's a hard thing for the agency to, make heads or tail up without further guidance from the Department of Labor. So, if we were actually doing real reductions in force, I do think it would be easier, for the states to process these things. And that's the point the states have made themselves. Many of you on the call may know that there were, I believe, 17 states that came together in a lawsuit with some filings about the burden that these probationary firings were placing on them. And that was one of the points that they made in their filings was, that the confusing information that they're getting from the federal government for the separations, it's causing additional work for them in terms of doing adjudications, for these claims. And what I'm hearing from workers, it's really challenging, they were separated, they filed their benefits, and they get this idea they can get paid in 21 days. But then all of a sudden there's an issue. That's going to add another, 21 days, that will be the goal. But it really stretches out the time from that first week of unemployment, to when someone's going to actually get the payment.
Great. We have another question here about the poor performance. And from what I understand is there are people within the same agency being let go for no reason and being let go for poor performance. That's sort of all over the map. One thing I would say about normal times and unemployment insurance, a huge percentage of the people who get unemployment insurance just weren't a good fit. So they were let go. Through no fault of their own, they didn't do any gross misconduct, but they didn't meet their job's expectations. So this is a normal thing within the context of regular UI. But I am interested, Dr. Morris-Hughes, about are you seeing federal agencies responding or not responding? Are you hearing back from federal agencies?
We are hearing back from some federal agencies. We have a list of agencies that have a more manual process, like actually requiring mail, like to verify wages in mail, via mail, versus other agencies. Some agencies are more responsive than others. It is not overwhelming in either category. It's 50-50.
I just want to echo my understanding talking to another state. When you say mail, you mean like a letter, right? You're not talking about, not email.
Yeah. Oh, no. Snail mail. Snail mail. So we have a list of all federal agencies and their preferred choice of communication and verifying wages. And there is I'd say almost half little less than half are asking for us to communicate with them via snail mail.
So yeah, I just want to, and I've been talking about this with people. I just want to do a little comparison and contrast. We had a third party administrator on the call earlier. Those are companies that help private sector claim, let's say 50 or 60% of, companies are with one of those. Those companies and others are connected to the side system. So it's even faster than email. It's basically, there's a dedicated online interface where those administrators can just go see, maybe that day there's 50 different claims from all their clients. They see all the information right there, and then they can verify it through their database. So it's even like faster than email, I would say. So that's the private sector standard, because again, it's just the reality. This is where the world is changing. Federal employees thought they're going to have their jobs until they retire. So there's usually very few unemployment compensation for federal employee claims. So this way of it's going, just if you have one claim per year or two claims per year, getting it by mail is, can be not an issue, but now you're going to really increase that volume. It can really, cause some delays. So that's the kind of comparison and contrast, that we've been making.
Thank you for that. I just kind of assumed everyone knows all of the parts here. But yeah, so you can imagine going through sides versus having to communicate via snail mail.
Right. I've got another question
via mail.
Yeah.
Well,
I've got another question for you in the chat, Dr. Morris-Hughes. Can you talk about what share of the UCFE claims since the end of January turned into first payments, and how does that compare to regular UI or UCFE claims in the past?
Yep. So based on our data last week, let's see, we look at in terms of period performance or first payment promptness, 14 days and 21 days from the date of the claim being filed. And for 21 days, we are under 70%. Now, what I don't have in front of me is the date that initial claim was filed. But based on the data I have from last week, which includes initial claims, we're under 70% are receive their first payment within 21 days.
Great. Another good question in the chat, are we also expecting another influx of claims given some being called back to work, and the future state could potentially be a decrease of force? So I think we're all drinking lots of coffee right now in anticipation of continued layoffs.
Yeah. And Michele, what I'm scared about is people who have filed initial claims and then return back to work. And the reason why that makes me nervous is because all of those claims have already started, and I'm not sure how many payments may go out the door before they return back to work. But we don't want to get into a place where we were or where we are now with programs like PUA, Pandemic Unemployment Assistance. Sorry, I'm going to try not to do the acronyms here. LWA, Lost Wages Act, where because of the emergency nature, we were issuing payments, trying to get money out the door. And now the feds have come back to us saying, there are overpayments created, for different reasons, and now you pay back. And so I'm really concerned about, especially as we see, more litigation and more cases being filed, if we'll be extended any grace for any payments that we've made in the spirit of trying to get it, pay people within 12 or 14 or 21 days, if we can receive any grace from Department of Labor and they don't create overpayments. That's what I'm most concerned about right now, about those who are called back to work.
That brings up a good question. If I'm laid off and I go apply for benefits, and then I find out that I've got my job back with back pay, and I go back and repay the state agency, then I get laid off again. do I establish a new claim or do I open up the old claim? That's all very confusing. I'm sure it's going to depend on the state, right? But
I could just speak for the District of Columbia, and I'm gonna look, I got my experts in the room. I think if the claim has been filed, there have been payments made, the claimant pays, goes back to work, pays the state agency, the District of Columbia in this case, back, then they get laid off again. I think that's opening another initial claim. I have to check with my folks, my experts in the room are saying yes, but they'd have to open another initial claim.
And so I will call folks' attention to the Q&A. I think everybody can see this. There's a comment from Deborah Greenfield about, and a link to follow to go to a 90-minute training. The AFL-CIO, federal sector unions, and many allied organizations, Civic Nation, Democracy Forward, American Constitution Society, Partnership for Public Service, and others are collaborating to stand up a new organization, the Federal Employees Legal Defense Network, which will launch on April 9 to connect federal workers with lawyers who agree to provide free consultations. They expect a huge demand on the part of federal workers and urge practicing lawyers anywhere in the country to represent former federal workers. There's a 90-minute training tomorrow, and there's a link in the chat to attend that. So just wanted to call that out. And looking at questions here.
I'm reading Andre's comment.
Yeah, go ahead.
Yeah, so we have a more of a Q&A, but a suggestion from someone who wrote suggesting that the employee asks their agency for their FIC, Federal Identification Code number and information in advance. So if you're, there are so many federal agencies out there, and the way in which the states get reimbursed is for DOL to kind of coordinate to make sure they take it from the right account, and also for the agency to know where to send that wage verification. Knowing the Federal Identification Code would be very helpful. So that's something you could try to find out before your last day. Find out what your Federal Identification Code is. That's something your HR, anyone in the HR team should be able to look up. Some of the information is online, but it's a little hard to find. So I would just go ahead and ask your HR for that number, that name.
Another really good question in the chat, one which I don't think I know the answer to, maybe others do. Are federal agencies contesting UI claims at an unusual or usual rate for those laid off recently?
I don't think we've heard a lot in terms of, my folks are saying no in terms of contesting. I think the biggest focus is getting people to respond.
Good to know.
We're not getting, my team says we're not getting a lot of federal agencies that are contesting.
Got a good question in the chat from UI Advocate, who represents people who try to comply with ID verification and for whatever reason can't complete the identity verification, and then they lose their weekly claim, their ability to claim weekly benefits. He usually advises claimants in that situation to call their agency. Is there any other guidance or advice that we would have for people like that?
Can I just say, because we get this frequently, come to an American Job Center in person. We actually just opened a brand new American Job in the District of Columbia, 899 North Capitol. It's in walking distance from Union Station. It's brand new. It's very accessible by Metro, but come in person. We've been able to resolve these issues in person. I know it is not ideal. I believe we can schedule appointments. And so you can plan. If you schedule it, go online, you can schedule appointments so you can plan your visit, but resolving it in person takes less than 30 minutes.
No, that's great advice. So in terms of just the guidance, that's one of the things in the guidance. The guidance does require that every state have at least one non-digital alternative for verifying your identity, so not strictly only online. And Benjamin, just to give you, this is a kind of it depends. So if someone is already in claims filing status the regulations state that they only can hold a claim for 2 weeks if there's an issue with identity verification. The challenging area, there's not necessarily a corollary to that strict guidance for someone who never established an initial claim. The general, timeliness, guidance plays into this. When do all these things, generally come into play if someone never received their first payment because of an identity verification issue, but not that same, period. There's not a federal standard for how long you have to verify your identity. That's something that the states, each state is doing a little bit differently. And we know, there definitely been some technologies that have been out there where there's been some challenges between the matchup of the technology's capacity to do a verification, especially if there's, some issue. And there's a lot of issues with these technologies. They're very powerful to work at scale, but something as simple as for some of the technologies that you have a prepaid phone instead of one that's with a regular account. Well, that could be enough that they can't verify your phone number, so you can't do digital identity verification. So there's a lot of reasons that a legitimate claimant could get tripped up by that. Unique makes a great, suggestion. If going in person, even if you still have to use that same online system, there may be someone there that can help troubleshoot you. Well, why am I getting blocked? How can I get to the trusted referee process or some other thing? You can really kind of help you navigate it, even if it's still verify your ID through an online system. You may get better luck at doing it at the office, or they may just have alternatives. You bring multiple pieces of ID. It's clearly you're there in person. Well, that's meeting the standards that we wanted the states to follow, that you're verifying that you are indeed the person that's the social security number matches up with. So that's a great piece of advice, and I hope states can do more to make in-person ID verification possible.
Can I just say one thing about this really quickly? Michele, we did so much work with this, 3 years ago. The District of Columbia knows all of the nuances and complicated scenarios with verifying identity because of the population that we have been serving for years. It's our core population. And so we are sensitive to that. We understand that, and we work with people. So coming in person, I feel confident that we will work through these issues to verify identity.
Great. Another great question in the chat. I think not everybody's aware that unemployment insurance is subject to federal tax and in most states, state tax. When a worker needs to pay back the UI agency, do they need to return the gross amount or the net amount? And that I'm not sure about.
My instinct would be the gross amount, because you're not going to pay taxes on it. But I wonder what your team. So let's say, to round numbers, you're a $300 per week unemployment payment. You went back to work, you make $1,000 a week, but you owe back the $300. Even if you decided, okay, I'm going to do the advanced tax withholding, they're going to take $30 out of that, you get $270. I think you would go ahead and return the whole $300, and then that little amount, you'll get your 1099-G at the end of the year. It will say how much tax you withdrew, and they'll add that. You'll add that to your tax return. And if you end up taking out too much in tax, you'll get a tax refund. But I think in general, when you're paying back an overpayment, you're going to pay the gross amount of your unemployment benefit. That's what your overpayments can be assessed.
I'm going to go with your answer.
Yeah.
And I'm going to go with your answer, but also the state agency will send you a notice of exactly how much you'll need to pay back. And I would follow that as well.
That's correct. They'll tell you how much. They'll even helpfully put a payment coupon in there for most cases.
But again, guidance, right? This is where guidance could come, and some grace, because there are a lot of moving parts here. Restraining orders, saying pause with the layoff, people going back to work, people being laid off. If there is some grace that can be extended to state workforce agencies and these claimants, overpayments really shouldn't be part of the conversation if there's a week or so in flux. I'm just, I'm making the case to people who already know the case of having some grace and guidance here.
Yeah. I'm just going to answer a question in the chat really quickly. What we're talking about in weekly claims is the continued claims, not repeated initial claims being filed over and over again. Another good question. We kind of touched on this earlier. What happens when the federal agency doesn't respond? Are there situations where lack of response would prevent a claimant from getting benefits?
For here in the District of an affidavit, affidavit. Matter of fact, just prepare in your mind that it may just be an affidavit. And from there, we'll continue on with processing your claim.
The short answer is you look at the regulations, it's not supposed to be the barrier. If they don't respond, but you can provide some additional proof, it puts a big burden on the state. They'll weigh the factors and what evidence you've provided. That'll be helpful. That's why it's so important, to tell claimants to get their pay stub so they have some verification.
Yep.
Another great question that Flannery and I were just talking about is overpayment waivers. How does that work? And it's going to just depend on your state. How do overpayment waivers work? I'll ask about Virginia and about DC.
So I think 40 states offer overpayment waivers, but the rules are a little different in each one. In Virginia, it's two-prong. You have to be without fault in creation of the overpayment. And you would have to forego basic necessities in order to repay the overpayment in order to be eligible for a waiver.
And I think, and I'm gonna look to my team to make sure I'm using the right language, but we will review a request for an overpayment waiver. I believe our standard is good conscience and equity. Is that look at there, I got that right. But we look at hardship, and we will make a determination, and we will review it. If you go to our website, we have information on how to request an overpayment waiver. But okay, last time I'm gonna make the case for this. Guidance and some grace and flexibility to states, please. But I know I'm preaching to the choir here, so.
Well, and with that, we are on the hour. I want to thank everybody for attending, for your great questions, and I really want to thank our esteemed panel for participating. This is just probably the first of many in trying to answer people's questions on this important topic.
Thank you, Michele Evermore, for your leadership and the leadership of the Academy in this topic.
Oh, thank you.
Thank you.